Hello, family. Welcome back to my Forex channel. If you're new here, this channel is designed to simplify Forex trading so you can trade confidently and profitably, step by step, the right way. So in our last video, we talked about the 4 essential steps every trader must follow to trade confidently and profitably. If you've not seen it yet, I advise you check it out. Of course, it lays the foundation for everything we're about to cover today. So in today's video, it's going to be all about market analysis and strategy to trade. One of the 4 important key steps which I explained in the last video. So like I said, this video is going to be more of practical. So I'm going to break this down in a way that will be simpler and clear if you're just starting or you've been struggling to figure this out. All right. By the end of this video, you would understand how to analyze the market and how to apply effective strategies that can help you become a confident and consistent trader. So make sure to watch till the very end because I'm going to keep it practical and straight to the point as possible. All right. So before we proceed, I would like to first introduce the online trading platform because that's where we analyze and get trading opportunities. So I'll be doing all this from my tablet. You can also use your phone. This is just to prove that you can trade with just your smartphone. I said that before, just a smartphone is okay for you. But if you have a tablet or a laptop, that's a bonus. All right. So the online trading platform I use is MetaTrader 5. So you can use it to analyze and place trades. It has a lot of tools for analyzing, so you can explore the app yourself to understand better. Major brokers and prop firms always support MT5, which is MetaTrader 5. So it's one of the most popular online trading platform out there. All right. So for today's teaching, I'll be using MetaTrader 5 and TradingView for analyzing and placing trades. Okay, so let's get into it. All right, family. So let's jump down to practical. Like I said, we're covering market analysis and strategy to trade in this video, and I'll be starting with market analysis. So firstly, like I said, I want to introduce the platform which you'll be using for analyzing and placing trades. And if you can see on your screen here, you can see the 2 icons. The first is a Chrome browser and the second is the MetaTrader 5 application, which we use to place trades, right? So the Chrome browser is for analyzing, which is we having access to trading view. Okay, so why the MetaTrader 5 is also for analyzing and trading. So I actually like the browser because I'm able to access the chart better with the trading view. You can access the chart also with MetaTrader 5, but I just prefer that of trading view. So I'll be using that as an example because I'm using my tablet, so the view is way better. I'm going to do another video on how to operate the MetaTrader 5 application because this alone should be a teaching on its own. Most persons don't know how to do that, or you can check up YouTube for videos on how to go about navigating through MetaTrader 5, but along the line I might drop a video on that as well. So today we'll focus mainly on market analysis and strategy to trade. So let's pick up market analysis first. Now, market analysis is one of the most important skills you need as a trader. Okay, so it simply means studying the chart or the market so you can have or make informed trading decisions instead of guessing. So this is you analyzing to get trading opportunity instead of guessing and gambling. Okay, so like I said, forex trading is a skill, and for you to know how to trade, this is you acquiring the skill. Market analysis, you having good analytical skill. That is you knowing how to analyze the market and get trading opportunities. So it's not you guessing. All right, you predict the market, you should get to a particular zone to buy or sell. It's not you guessing. This is you applying your analytical skill. Do you understand? So your analysis is what guide what, when, and how you trade. All right, so there are 2 main type of market analysis. There is the fundamental analysis and the technical analysis. So we'll be focusing on the technical analysis because that's what you need more, mostly for those that are beginners. I want to advise you to go into fundamental. Forex is a step-by-step process. It's not something you jump into and feel you can know everything at once. No. Do you understand? So it's a step-by-step process. Even for this video, the market analysis and strategy to trade, I can't cover everything due to how complex it is. Do you understand? So, but the little knowledge you can use to start is what I'm going to give you. All right, so we'll try to be brief as possible so that the video will not be too long, but I'll try to hit the nail on the head. Okay, so let's go to fundamental analysis. Like I said, there are two types of market analysis, the fundamental and the technical, right? So let's attend to the fundamental. I'm going to brief you how it works or what it's all about. Then we go directly to technical analysis, which is more of the practical, which we'll be doing today. Now, fundamental analysis is the look at economic news, interest rates, central bank policies, and the big picture economic data. So it is important to understand the overall market sentiments, but in this class we'll focus on the practical side, which is technical. Like I said, technical analysis on the other end is what most traders use, including myself and other professional forex traders. That's what we use the most, and it's what we use to actually make trading decisions. So it involves studying price charts, identifying patterns, trends, support and resistance, and potential entry points. So it is basically we using past price action to predict future price action. Technical analysis is using what the market has done before to predict what the market will do. Do you understand? Because the market tends to repeat its movement. All right, so we use the analysis of the past price movement to predict the future price movement in general. So technical analysis is especially useful for short-term and intraday trading. So that is what we'll be focusing on here. So if you want to know more on the basics of Forex, including what Forex is, how Forex works, make sure you watch the video 1 or the first video in this series. So when analyzing the market, there are 3 major types of trend which you need to recognize. As a trader, there are 3 main types of market trend which you need to recognize before you trade. That's the first thing you need to know if you are applying technical analysis. There's the uptrend, there is the downtrend, and there is the ranging or sideways trend. So these are the 3 types of major trend which we have. All right, uptrend is the price making higher highs and higher lows. Downtrend is the price making lower highs and lower lows. Then ranging and sideways trend is price moving between support and resistance without clear direction. So as a trader, your edge comes from recognizing these trends easily. All right, so in an uptrend, we are meant to buy at higher lows. I'll be showing you an example, but I'm just giving you theory so that you understand before we get down to practical. Okay, so in a downtrend, we are meant to sell at lower highs, but you are meant to avoid getting chopped in ranges unless you are experienced with range trading strategies. So if you are a beginner here, you should focus on just 2 trends, the uptrend or the downtrend. Okay, if you are seeing a ranging or sideways trend, I would advise you avoid the market except you have a strategy that is built for range trading. All right, so let's just get down to practical straight up. Okay, family, so over here you would see the 2 major trends which I talked about that is very, very important for everybody to know if you are using technical analysis. The first on the left here is uptrend, and we have the next, which is on the right, downtrend. So I'll attend to it one by one. So please listen attentively, okay? So let's start with uptrend. So uptrend, like I said, is price making higher highs and higher low. Now, this simply means price is pushing higher than the last high, then making a higher low before pushing again. So this is it here. This is a higher high. Price make a higher high, then it makes a higher low before pushing again and making higher high. So when you see these patterns, you know that buyers are in control. All right, so you can see this is higher high, this is higher low, this is higher high, this is higher low, this is higher high, this is higher low. This is how price prints. If it's uptrend, this is how it prints. Now your goal is to buy at those higher lows for safest entry. So like I said, you first need to identify the trend of the market, if it's uptrend or it's downtrend. That's the first thing you need to do when you want to analyze. So once you know that, if you're seeing uptrend, you should know that it's buy opportunity you're looking for. Just for easy understanding, if you're a beginner, this is what you should do. If it's downtrend, you should know that it's sell opportunity you're looking for. Now, even if you're looking for buy opportunity in uptrend, there are still some particular places you are meant to buy, which is higher lows. So this is the safest entry for buy opportunity for uptrend, higher lows, which are these zones here. This is higher low, this is another higher low, this is another higher low. So if you are missing this first higher low, you will wait for the market to print higher high and come back and do another higher low. So let's move to the next, which is downtrend. Now, downtrend is price printing or making lower lows and lower highs. Okay, so this is opposite. It's the opposite of uptrend, and it is price pushing lower, then making a lower high before dropping again. All right, so this confirms that sellers are in control. So as usual, for downtrend, you should look for sell opportunities, and obviously there are places where you are meant to sell, which is lower highs. So you should sell at lower highs. All right, so if you want to learn this properly, you have to practicalize it for you to understand better. So I'll be going to the chart after this to give proper explanation after explaining the third type of trend, which is sideways trend. All right, so this is the third type of market trend, the sideways and ranging trend. So this is price moving between support and resistance without clear direction. All right, so price will be moving between a particular support and resistance zone without clear direction. So sometimes it might create equal highs and equal lows. This is an exact example of equals high and equal low. So like I said, you should not find yourself in this particular position if you are a beginner, except you have a ranging trading strategy. So you should avoid when the market is ranging like this between support and resistance. So now you need to understand what support and resistance is. You see price going up and hitting this particular zone and reversing back, it is a resistance zone. All right, so the same for support, price dropping and bouncing back, it is a support zone. It's a support zone. So once you see price ranging between the support and resistance zone, it is a ranging and sideways trend, and we should avoid trading in this particular zone except you are an experienced trader. All right, so if you can spot these structures, you will have a big advantage. Market structure is the foundation of price action trading, and it is essential for making smart entries and exits. Okay, so let's practicalize what we just learned on the chart. Okay, so like I said, for downtrend, it is price making lower highs and lower lows, right? So that's what I'm going to explain further. The market was actually buying, then it decided to change trend. You can see the market was going up over here, it got here and it started reversing. So you would see exactly how the market changed trend, forming lower highs and lower lows. So you can see this is a strong resistance zone, which I showed you. This is a strong resistance zone, and this is a strong support zone. Price came back here and was bouncing back. Can you see it? So price got here and it's bouncing back, and this is a strong resistance zone also. Price was coming back to this zone and bouncing back. So this is just an example of support and resistance. But then I want to explain the downtrend, right? So this is downtrend. Like I said, for downtrend, price is making lower highs and lower lows. So this is a perfect example for price changing direction or trend. This is a lower high, right? This is a lower low. This is also a lower low. This is a lower high. Do you understand? On and on like that. That is how the market should be printing trend. It should come down like this to form a lower low. If it's retracing, you trace and do a lower high again. So on and on like that. The market makes lower highs and lower low. Right? So once you are able to spot these structures, you have a big advantage in the market. So you can see I kept taking entries at lower highs. Can you see? I sold at lower highs. I sold at this lower high, on and on like that, because I obviously can spot the market structure or the market trend. I can see the change of the trend. That's why I can spot it easily. So once you're able to do this, it becomes way easy for you. All right, so let's talk about the other, which is uptrend. So like I said, for uptrend is price making higher highs and higher lows. So let's identify that. Okay, so as you can see, for this uptrend, I was just taking buy opportunities. Can you see this is buy, this is another buy, and this is another buy, because I'm focusing on just buy opportunities for uptrend, given that I have to look for buy opportunities at higher lows. Okay, and this is an example of higher low. Now when the market makes higher low, like I said, it makes another higher high. So the market cannot be as neat as I show you, but this is an higher high. So when it makes higher high, it ranges a little bit and came back and do another higher low. So this is another higher low for buy opportunity, on and on like that. This is another higher high, did another higher high, it dropped again and did another higher low. So all these zones are where I should look for buy opportunity at higher lows. So it's quite easy to spot if you know it very well. So it takes consistency and practice to be able to spot this very quickly. Okay, so that is that about bull trend and bear trend. So it is the same thing with uptrend and downtrend. For the uptrend, is also called the bull trend. All right, so we are meant to buy, which is also long in forex terms. Then for sell opportunity, it is bear trend. So we're meant to sell, which is we're meant to short in forex terms. Okay, family, so let's go on to the next, which is time frame guidance for multiple time frame analysis. All right, so to analyze properly, you need to look at multiple time frames. So I've just been showing you guys example of uptrend and downtrend and how it moves on a particular time frame, which is just an example. All right, so to analyze properly, you need to look at multiple time frames. So I'm going to break down time frame into 3 sessions. We have the first, which is the higher time frame. We have the second, which is the medium time frame, and we have the third, which is the lower time frame. So for those using technical analysis for short-term trading and intraday trading, the first is higher time frame, which falls between the 24 hours, which is 1 day, to the 4-hour time frame. So it falls between the 4 hours to the daily time frame, the 4 hours to the 24 hours time frame. So this is where you identify the overall trend and direction of the market. So it gives you the big picture, so you don't trade against the main flow. So the main flow, you can view them from the bigger picture of the market, which is the higher time frame. Then the second, which is the medium time frame, falls between the 2 hours to the 15 minutes. So between the 15 minutes to the 2-hour time frame. So this is where you study market structure in more details. So basically, I'm viewing this from a medium time frame. Do you understand? So this is where you study market structure in more details and draw your zones, the areas where price is likely to react. I'm talking about me using my trading strategy now. Not everybody draws zones and all that. Some persons might just be using trend lines, another trading strategy. But since I'm basically giving you the knowledge which I have, the medium time frame is where I study the market structure in more details and draw my T zone, which is me applying my trading strategy. We're going to go to that, so let's not jump to that. So this is the area where price is likely to reverse, obviously the zones which I'll be drawing, and it helps me plan, or it helps you plan where you want the market or price to go before you even think about entering. So this is always trading with precisions, like I said. Then we scale down to the lower time frame, which is the third. Now the lower time frame falls between the 1 minute time frame to the 5 minute time frame. So this is where you execute your entries. This is where you make market executions. Okay, so you wait for price to enter your zone and you look for confirmation, like break of structure, trend line breaks. So it gives me precision for better risks to reward. So by combining all these time frames, you don't just guess your entries or your trades. you build a plan on market structure and confluence. So I talked about confluence earlier, that confluence is the combination of multiple trading strategies and analysis to get the same trading opportunity, which gives you a better hand or a better advantage in trading. All right, let me just give you a brief example or explanation on the multiple time frame which we have. All right, so basically, for those that want to know how to use the trading view from their browser, if you're using an Android, you can use that of Chrome, like I said, and if you are using an iPhone, you can use either Safari or still Chrome or any other browser that is compatible for trading view. So all you need to do is, if you want to have a trading view that gives you access to both synthetic indices and currency pair, this is the best trading view for you. And if you're looking above here, you would see the link charts.deriv.com. That's the only thing you need to search. Charts.deriv.com is going to bring you to this page, and there are a lot of financial instruments which you can analyze here. So once you analyze here, you can place trade on your MetaTrader 5 application or whatever online trading platform which you are using, but it is always very good for analysis. All right, so these are all the financial instruments available to analyze on this particular trading view. We have Deriv, which is the synthetic indices financial instruments. You can see there are a lot of them here. Can you see it? That's why I told you there is money everywhere. You just have to focus on a few and master. You don't need to trade all financial instruments. Focus on the ones which you feel you are familiar with and trade. So till date, I still just trade about 3 to 5 and I focus on it. So if you don't want to trade synthetic indices, you are familiar with other like gold. Gold is one of the most popular financial instruments. It's under commodities. You can see gold USD, and you can see other silver USD, platinum USD, and the likes. Okay, so if you don't trade that, also you can trade BTC USD, Ethereum USD, down to stock indices. You know, there are a lot of them. Then we have Forex, which is the major financial instrument. Currency pairs. You can see a lot of currency pairs here. So just pick the one you are familiar with, or the one which the mentor you have trade. So back to what I was talking about, time frames. So you can see the time frames. There are a lot of time frames here, but if we click on this, we would see a lot of them. Now we have the hour time frame and the minute time frame, right? So like I said, the higher time frame falls between 4 hours to 24 hours, which is here. So these 4 hours, 8 hours, 24 hours is higher time frame. So we use that to see the bigger picture of the market. It's the same move. It is the same financial instrument, is the same chart, just different time frames to view the bigger picture and scale down to the lower time frame to get good trading opportunities. So we use the bigger time frame to check for the overall trend and direction of the market. I won't be able to do that step by step because of time, but I will drop a video on how I trade with time frame, specifically for just time frame trading, for you guys to understand better. So after using the higher time frame, I go down to the medium time frame, which falls between 15 minutes to 2 hours, which is 15 minutes, 30 minutes, 1 hour, 2 hours. All right, I use this to study the market structure for more details and draw my zones. Right, this is me analyzing. This is how I analyze. That's what I'm explaining. Okay, so then I scale down to the lower time frame, which is between 1 minute to 5 minutes or 10 minutes. So I use this to execute my entries. So I wait for price to get to the zone which I drew on the medium time frame. Then I make my entry after proper confirmation. All this is me applying my analytical skills to get trading opportunity. All right, so that is basically how I analyze. So by combining all these time frames, I don't just guess my entry. Let's go down to the next, which is strategy to trade. So we've attended analysis and I've given you my blueprint on how I basically analyze. All right, so this is not something you can learn on a sitting. Like I said, I'm just trying to brief you and be straight to the point as much as I can. Okay, so let's move down to the next, which is strategy to trade. So now that you understand the importance of market analysis and how to read the market structures, let's talk about having a trading strategy. So trading without a strategy is like driving without a map. Here you get lost, make emotional decisions, and blow your account. A solid strategy gives you structure, rules, and a clear plan for every trade you take. So trading without a strategy is very dangerous. You have to have a particular strategy which you use to trade. So in my teaching, I always tell my students to think in terms of confluence. That is stacking up multiple signals and confirmation, so you don't rely on just one thing. So that's why I built mirror snipe strategy. And to apply it correctly, you must include confluence. It works well with confluence. So it's not just about luck that I cut all this trade accurately. It's about alignment, multiple confirmations before making a move. Okay, so here are some key strategies that I expect every serious traders learning from me to understand and use to build strong confluence. So the first is mirror snipe strategy, which has the mirror T-zone strategy and the mirror entry strategy, right? Then we have the top-down analysis. Now, the top-down analysis is very similar to the market analysis, which I just explained, using the higher time frame and scaling down to the lower time frame to get good trading opportunities. So top-down analysis, we have the liquidity. Yeah, this is an example of liquidity. The market is in a downtrend, but the lower high, we tap out the former lower high. So this is an opportunity, is a strategy itself. Once you sell here, you take profit at this zone. That was exactly what I did. Can you see? This was my stop loss risk. This was the amount I was risking, my entry point, and this was the move. So this is another strategy itself, but I use it as part of my confluence because we can see here, I drew a zone over here. Can you see? Is when the market got into the zone, I used the liquidity as my confluence to get trading opportunities. So that's just an example, by the way. We'll get down to details, but we also have the break of structure. We have the trend line analysis and the flip zones. Okay, so all these strategies are very common, and that's what I use as my confluence aside my trading strategy. So these tools are what I personally use, and that's what I teach in details in my mentorship. So if you learn them well, you'll be able to trade with more confidence, precision, and discipline. So now let's break down my trading system, the mirror snipe strategy, so you will see how everything comes together. So like I said earlier, you can't master all this in one video. You will need personal guidance or deeper teaching. So feel free to reach out to me, okay? So let's start with the mirror snipe strategy. Now let's talk about my personal approach, the mirror snipe strategy. The strategy is designed to help stop guessing and start trading with a clear plan. It has two main parts, and both are very essential for consistent success. So the first is the mirror T-zone strategy, and the second is the mirror entry strategy. So I'm going to explain this one by one, and I will try to be very brief, like I said, because of time, and with time I'll be doing more teaching on this. Now let's talk about my personal approach to identifying high probability price zones where price is likely to reverse. Yeah, zones like this, they are called price zones. Okay, I drew them because I want market to get into it and reverse, and that's exactly what the market did. Can you see over here? The market got into the zone, it broke through here, which is obviously a takeout, right? So this is a price zone, this is another price zone, this is another price zone. So I'll just be using this to explain further. My personal approach to identifying high probability price zone where the market is likely to reverse is what I call the mirror T-zone strategy. So this is my analysis phase, obviously my technical analysis phase, and it's about planning my trade and not chasing price. So first, I always decide whether I am looking for buys or sells. I said that earlier for the market analysis. Can you see everything is coming together, right? So I always decide whether I'm looking for buys or sells by studying the overall trend of the market. So we follow the trend and we don't fight it. So this is me applying my analysis to get the trend of the market. So what I do is I check the higher time frame, which is between the 4 hours to the 24 hours, to get a clear directional bias. All right, so I see the proper directional bias. This tells me if I should be hunting for buy zones or sell zones. So that alone will clear if I'm looking for buy or I'm looking for sell. It will give me clarity if I'm looking for buy or if I'm looking for sell. So next is I drop down to the medium time frame, which is between 15 minutes to 2 hours. Sometimes it can be 4 hours actually. So depending on the trade which I want to take, because the range offers cleaner structure without too much noise. So this medium time frame is best for drawing your price zones. This is where I draw my price zones on medium time frame. On this time frame, I draw my T zones, which is the price zones. So these are specific price areas where I believe the price or market is likely to react or reverse. So this is what I used to draw my zone. These are two given by TradingView. It is also on MetaTrader 5. Okay, so what I do is I just draw my zone, but I draw it where I feel price is likely to reverse. And like I said, I didn't just pick these zones randomly. Okay, I look for strong confluence with multiple confirmations. Now the strong confluence I use for multiple confirmation is support and resistance level, trend lines, order block, previous supply and demand, liquidity areas, break of structure. So either of all these which I just listed, I use them as confluence. I don't necessarily have to use everything. Like I said, just 1, 2, 3 is okay as confluence. Okay, just to get that confirmation that it's not just because of this I am putting my zone here. Do you understand? So let me use this first zone I drew as an example. Okay, because of time I won't be attending to much example, just one each. So this is an example of my price zone, which is the T zone which I drew, and the first confirmation is that this is a resistance level. Okay, saying that the market came into it the first time, it came into it, broke through and came down again, came into it the third time. Can you see it? Now this third time it came into it twice. If I go down to lower time frame, you would see it properly, the clear picture. Like I said, this is a 2-hour time frame, the medium time frame. Every candle here is formed with 2 hours. If I'm in the 4-hour time frame, every candle is formed with 4 hours. So you need to understand how the time frame works. So don't think this was a short move. If I go down to lower time frame, you see how long this particular move here, you would see how long it took for the move to be made. So the first confirmation, like I said, for this price zone is the support and resistance level. Now the second confirmation which I got is trend line. So you can see here I drew a trend line there. Can you see it? Now the market tapped the trend line the first time, came and tapped it the second time here, and it came to it the third time. This is my opportunity to enter. So obviously adding more confluence, this is the liquidity area which I said earlier. The market took out these highs, right, and came into the zone. So it is obviously an opportunity for me to sell. So this is me applying confluence. So like I said, confluence work well with mirror snipe strategy. So this is an example of a price zone, which is a T zone, where I feel market is likely to reverse. That's why I drew the zone here. All these places that I drew the zone, you can see market came there and make reversals. Although there are some zones I will draw and market won't get to it, so there is no need to leave it. So I just like my charts being very clear, is why I always take it off. Do you understand? So before I continue, you can see the line drawn on this screen is an indicator. It's called moving average. So I use this to indicate the trend of the market, and I give it to my beginners students. It helps them indicate the trend of the market without stress. So back to mirror T zone strategy. So my goal here is to define what exactly I want to trade. I don't take a trade just because the price gets to my zone. So because I'm an experienced trader waiting for the market to get into the zone, it came back to this my zone and I bought a little bit. You can say I bought here, came back again to this zone, I bought here. Because I'm an experienced trader, that's why I can take both buy and sell. But as a beginner, I would advise you take only sell if it's a downtrend and take only buy if it's an uptrend. So as you trade, you get familiar with the market, you get to understand the market better and not get confused. Okay, so I don't just take a trade because the price reaches my zone. Like when I draw this zone and price gets to it, I don't just take trades. I wait for confirmations to stack up. I must see alignment across my rules and confirmations before I even consider placing a trade. So there are some days where I don't trade at all, because if I'm focusing on 1, 2, 3 pairs of financial instruments and I don't see the right setup, I simply don't force anything. I don't trade. So while other traders might take 5 trades in a day based on different analysis, different signals, I might only see one or even sit out completely, and that is totally fine. So this is especially suitable not just for working class traders who have jobs and need a practical approach, but also for beginners who want to build discipline from day one and avoid over trading. So the strategy works because once you draw your zone, you just wait and sit out for the market to come to you. So this strategy helps you stay patient, selective, and disciplined. You're not glued to the chart all day. Instead, you wait for price to come to your planned zone, and with confirmation, you now apply mirror entry strategy. So this is mirror T-zone strategy in a nutshell. You identify your directional bias with the trend. You mark strong price zone with confluence. Then you wait for the market to come to you, and you only take high probability trades with multiple confirmation. So this is one of the most important lessons which I teach: planning, patience, and precision. Okay, so like I said, it's not something you can understand just on the sitting with one video. I'm trying to just give you the blueprint on how I trade using market analysis and my trading strategy. Okay, so this isn't something you master in one sitting. Like I said, it is meant to be studied. This method needs to be studied, practiced, and refined. All right, so if you want to learn this step by step after this teaching, you can send a DM or reach out to me for more details.